morning, class. Welcome to Homeroom with Unk and Market Monk. Good morning, P. How's your week?
I was pretty good. Just kind of gave up on the longs on MSTR. Sort of saw the breakdown coming and did really well to close the week with puts on that, and had some winners I'd been holding for a little while. JBHT was one of them. I'm pretty light this week though for me.
Yeah, definitely. I mean, we'll get into it when we get into the tea leaves here, but definitely a switching gears or a change in what was going on, and definitely affected the trading from the share side. Last week I talked about how I kind of got the stops in on time, and this week, get back in there and try to plan the next trade on a lot of things. And there's just, you're either around a level or you're in the land of the lost on a lot of the stuff that I like to trade. So kind of light
Yeah.
for me. Um, they really, even in the daily momentum plays, there wasn't a lot of those. It's fucking raining out here. Can only play golf once a week, so I don't know what to do with my hands. But it's one week. We have kind of rotate a little bit. We have a lot going on in the world right now. I'll be 100% honest. I don't know what's controlling it or what's most important. So not riding it out, but just kind of being mindful of where we might be at an intermission and knowing where we came from. Kind of helped me last week. That always early is good, but you don't want to be the first one into the downside. That's where the always early is bad. So I try to
Yes.
I
Yeah.
try to have some rules. I mean, we all know about the three candle rule and stuff, and I just kind of move those up on my ranks list in such certain situations, and the quicker you can do that, the better off you usually are.
But I thought SOC was a good example this week of I mean, they had the news that they get legal news a lot, and not always good. But the the rebound on it, like that next day was there, and I hopped in. I don't usually do options on it,
I
but
was there for options.
it was definitely there for options. Because at a price shock like that, the calls just get obliterated, and so before the market makers can even settle things, you can get a really good fill, and it's kind of a low risk sort of lotto thing. And so it bounced up that morning, and then retraced back down. And for the real trade, what I like to call like the actual trade, you got to wait. You got to wait a little while, and you're gonna have some time. You're not just gonna reverse the court ruling and have it shoot right back up,
Yeah.
but it'll regroup. And the reason I keep coming back to that one is the longer term setup never changes on it. It's these leaps. I won't even say the strikes, but like they're willing to just weather that and um, sort of work around that position. And those whales will hedge and go short too and all that. But the where it's going to come out of all this is still pretty clear to me. So I do look to get back in that one, but I don't think you have to be in a hurry and plant some flags on it. There's just I see a lot of where people will. I'm just going to make up some prices here real quick, but so like oh I added this at 11:20.
Hmm.
I got stopped out at 10:30, and now it's 15.
Oh, sure.
And I'm just like it's share side, right? And I'm just like, what? Where are those numbers coming from? And sometimes it's our levels and things, but I don't really use like the lower end of RTL as a stop. That's not really how I've ever.
Ooh, that's a bad idea.
Yeah, right. And because I've just seen like charts long enough and been at it long enough to that these little wicks happen, right? And they're a lot of times they're pretty quick, but you just want to see how it reacts when it's down there, and it's kind of part of the plan. But I don't like to let a computer stop me out necessarily. That's just like a personal thing. But I think just having such a tight stop on something that has a setup that, 30, 40, 50%, 50% up. I mean, you're not just holding on hope, but how many times that need to happen before you just do something a little different in terms of how you're adding and managing trades.
I mean, we've done this long enough, at least in the situations that we are presented. And I message you kind of probably one word about it, but it's always the same thing that I see, and I give us a little credit because our stuff is pretty good. So if you see it, you think you can get away with it, and if you don't have a
Yeah.
lot of time, I understand it. But they're just planting flags, and it might just be because of the psyche of okay, I can only trade 300, 600, $900 in this trade, and it not feeling like you're doing enough. So I
Yeah.
can't put in 90 and 30 and $60 at a time to scale in, or $120 at a time to scale in. That's why we said the CGC thing last week. It's a fucking dollar, buy one share. And I hope everyone did it, and I hope everyone's still doing it. The $1.30, I'll give that to
Yeah.
everybody. Everyone in the world can have that one. Buy some CGC every day at $1.30, just one share. See where you end up. As long as it's below the 140, I think we said. Whatever. But like they're not
Yeah.
doing that. So you get in a trade and then you go. Your mental just changes. I mean I trade enough. I know. When you know you have room, and like let's use Piton because that's a chart I know well. But when you buy Piton at 750, you better plan on buying that at 680 and be thankful for
Yeah.
it. And it's just
Yeah.
what you have to know, the range and the tolerance of the stock, and give yourself room. The backside of, I'll tell you the problem with it, just like free shares. The problem with free shares is taxes. You're going to pay some taxes. It's not technically free. But the problem with that is you're usually not where in your plan or your head full position when it
Yeah.
does actually move. And then you get in the other side of it. Well, now I don't want to sell because it's not enough, and you need to learn to scale in and scale out. That, I mean, you're just gonna, those 10 or 15 trades or however many times you trade it over are gonna be better than the one every single time.
Yes.
I mean, you trade options, so you're forced to do it because the prices bleed out, so to speak, or
Right. Yeah.
or your high point is so far from your pullback that it's ridiculous to not get out.
Right. I mean, and we're at a moment where um, the Greeks go a little nuts where that like let's say MSTR is at 300 and you buy an option on like it flushes below 300 and you're trying to buy something or just to move back to 305 or something like that. Well, that if it's back at 300 3 hours later, the price of those options is drastically different.
Yeah, just the
You
price
know,
in general. The range even
yes,
might be the same, but the
right.
price is different.
Yeah, yeah, and so it's just the idea, especially with options of, well, I'm just gonna try to get back to my entry. You need to move beyond where you entered, and depending on this, it can be a significant one, depending on how much that moves. I mean, you get late in the week on a weekly, which I don't recommend. I mean, for me, weekly after Wednesday afternoon, I'm talking about the next week. But anyway, the you get close to that zero DTE stuff, and an LLY call that was priced at like $400 at open. Um, to get back that $400, you need like a 1.5% move up, which is big for that stock. So I mean, people just trade like trading around what you can afford is is fine, but you can't do that with options and then just go like further out of the money and think you're in the same trade. So I don't think a lot of people do that anymore. The ones who did kind of washed out because it just wasn't getting through to them. That they weren't gonna adopt a style that we actually teach. It's too boring for them. But I do just really encourage people. Like if you're going to get in options, you really have to know how they move, and then share observation. For me, the park and wait thing is just such a big part of
Trade.
um, how I do that, and I know that I do a lot fewer moves on the smalls than most people. because the ones I get are usually I see some kind of big story, and I'm just gonna wait it out. And I know that like not everyone wants to trade that way, and these aren't huge positions for me, but they in terms of using the work, I think it's a little bit like driving, like being overly cautious can be dangerous too. And not that I'm telling people to take more risk, but why are you going to keep getting stopped out at 5 and 7% down, and then watch it move up, and it's like, oh, I got stopped out of that one. I got stopped out of that one. Like what is it? What is it that you're doing that's making that keep happening? So I'm always happy to talk to anybody about that. I hate to see that on stuff that does
What
so well.
what I don't like is it's 100% based on price. Like,
Right.
I give a
Right.
fuck about a low volume pullback. I really do. I don't give a
Yeah.
fuck. I don't care. I'm buying more. That's what I'm waiting for. Give me some of that. Give me some of that controlled. I can tell there's no real selling pressure, but price is dropping. Please. Um, but man, yeah, a lot to unpack there. That was just the last thing you said. I had to get that out because it was on the
Yeah.
tip of
Yeah.
my tongue.
Yeah.
Um, One of the things I really wanted to say in the beginning of that was like there's certain things if you didn't take advantage of, I guess you didn't pick up the knowledge and the nuances. But like we had China Friday, we had EV Friday at one point in time. We've had Crypto Friday, and the reason I
Yeah.
bring that up is because if you think I was like buying at some point in time, and then watching these things go up every Friday, and then down Monday, Tuesday, Wednesday, and then up more Friday, and not just trading that range and selling Friday and buying back every week and selling Friday and buying back
Yeah.
every week, are like looking maybe Wednesday so I can sell Friday, stuff like coming up with a plan because they're all a little bit different just on the time and the range of the stocks, and that's just like one blip on the map. Those that Friday momentum that we had. Um,
Yeah.
anything like that we have that's a bigger thesis. Um, I talked about. I guess I was too light on it, but I called it tolerance because that's kind of how I look at it. But you gotta like if you have a first buy, you gotta have another like your hell yeah price. I think that's what I used to call it. It's like I'm all in
Yeah.
here price, and it's gonna be a big range, and then you need to understand that range and what the percentage is, and that should be one, and then you should have three times that the ratio to the north. That's the 3-to-1 ratio. But that like the range there, you got to kind of figure that out. So if that, I mean, it's not just from here to there is a dollar, and then I'm 30 cents down because it's only a dollar up. You need to figure out your risk first, and I guess another statement I want to make is that we were, someone said, I kind of was hoping this time it went to the moon. Well, I trade from valleys to mountaintops. That's a
Yeah.
that's a
Yeah.
couple thousand feet, a couple $1,000. You know what I mean? The moon.
Right. Right.
You're a professor. The moon is a lot farther than that away. So
Yeah.
I'm
Yeah.
gonna trade that along the way, and over again. And if I get a piece of the moon, I'm probably gonna be on a good rocket ship.
Right. I mean, the like Oklo is an example for me that I bought some real pain on that one, and you had a number, and INQ was the same way, that a downside number, and I'm like, well, shit, all right, fine, I'll just buy it. And so I kept buying it on the way down because I see, there's like a bigger story there. Both of those did, go to the proverbial moon. I don't have nearly as much as I did. I peeled it off along the way, far exceeded anything I thought, more quickly. But kind of learned from Carvana and a couple others to just keep a little piece of it.
I,
But
I give out moons,
you know,
but they're good rocket ships.
yeah, right,
I mean, how's your
right.
Tesla? How's your Tesla Hunter doing? We're coming up on the 3 years of that.
Yeah, and like or something like well, yeah, we've had like Facebook and
Yeah,
Netflix and stuff. But
exactly.
yeah, but the LAC is an example too, where
Yes, yes.
you know anyone's going to be like in despair about it dropping 20%. I mean, where's it coming from? Like, when we were saying like
That's where you need to
low
put the
lithium,
stop right
right?
after that run. Like, and not
Yeah,
just one. Again, don't plant the flag there either. That's a great example, but you should have a spot where I'm all out. Like, all right, if it pulls back to here, I'm all done with this trade. And you should have a couple above that where you're taking profit if it does kind of pull back. Or you're never going to re-add, and you're just going to sit there and you're going to. That was what I talked about a few weeks ago with the going to 25 or 50%, and then you know pulling back 7% and going up 10 and pulling back 6 and going up 3,
yeah,
and you kind of just washed around, and you could have pulled out or retraded that range.
yeah, absolutely. And I mean, if you got to do it in separate accounts, that makes some sense too.
I do.
So, yeah, absolutely.
Well, yeah, and
But yeah, that was
I tell people privately, like especially when they tell me what they have, if like someone tells me I only got like 30K, I just made PDT, I don't want to lose it. Well, sweet, just take the 5 above PDT and only trade that.
yeah,
If you can't make that work, if you can't make 5 work, you can't make 50 work.
right. Yeah, it all scales. I mean, and part of this, I always liked the one share gang thing. Um,
Yeah, what up,
just
CGC?
because of sort of like, yeah, psychologically, and um, one way to use the work is to just go very small on these trades and just look at percentages and not money, and then you can really start to learn something. It takes a lot of the psychology out of it. I've never liked paper trading. I just don't. It's a waste of time to me. But I do think the find a way to just study setups, entries, etc. And I mean, if you're like me, you actually have some kind of skin in the game. It's much easier to actually do that process. So I don't care if it's, you're trading $20 and turning it into 24. Um, you're still learning there, and you can scale that up and do it as a real
Yeah,
trade
and
or
a
whatever.
lot
But
of these goddamn $20 and $30 stocks that we call psychological bounces off of, you just buy it 20 or $30, and even if you're only doing 10 shares to start, and just just know, master what it's gonna do. I know this is gonna go to 24. I know this is gonna go to 27. I know this is gonna go to
yeah,
33. I know this is gonna go to 36. This probably is gonna go to 36, test 35, or confirm 35 and go to 40. So I'm only gonna get rid of half of the 10. Master that. Just master that. Not
yeah,
I'm in, and how far are we gonna go? Just master that. Just do that over and over and over again, and start with 10, because everyone's got 200 or 300 bucks, and you will be surprised at the end of the month. You're 200 or 300 bucks or whatever you're playing there. You're up 40% on the month on all that, or 50%, or some months a lot more than that.
yeah,
Um,
yeah,
and
absolutely.
and then when you do that, don't size up. I mean, size up a little on that. Maybe go to 100 shares there, but spread that out on several charts, and then hit the fucking 8 out of 10, 7 out of 10 trades, and you will be just fine. But sitting there and getting washed around and hoping the market conditions stay the same, and hoping you're there the day the boner candle comes in, um, a lot harder to do. A lot harder to
Yes,
do. It's just so much harder
yeah,
to do. Yeah, start there. I mean, I'm not even talking free shares yet, P. I'm just talking about just becoming a profitable trader in some regard and getting a little confidence under you, because you'll start to see, whoa, that's moving way different, or
yeah,
okay, I got news. I'm gonna hang out here. Or okay, holy shit, professor's got a boxing glove flow read. Let's hang out a little
right,
bit.
right,
Stuff like that. So
yeah. Wanted to before I get to the boring stuff, regional banks. Uh,
okay,
that been through this before. The
what was
they
that?
get
What was that bank? What was it? It started with S.
like Silver Lake or something like that.
Yeah, I couldn't. Yeah, it was on the tip of my tongue the whole weekend. But yeah,
Yeah, the so this sector fear there and credit event or liquidity issues, all that stuff. That does come up, and the way I did that last time was kind of wait it out, let the sector just be completely hated, and then you trade the the best one, like fundamentally the best company that you can, the best bank you can find, and you swing trade that, and it's pretty easy. And Key, that was Key, and I mean, I don't know if Key is the best, but it was definitely check the boxes for flow and a bank that wasn't going anywhere, all that. So I think part of it, like you do that again. I will say that the options are a little more calm this time on some of these drawdowns, and I really think of the sectors, the government shutdown ending is going to really help them because a lot of their issues stem from access to money during a shutdown and or perception of fears about that and all that. But I just didn't know what how you uh how you kind of look at banks overall. I mean, we're having the bank earnings, um, and I noticed you return to the same ones a lot. I spread it out a little more, but big banks and small regional banks, it's a totally different animal. Even more so than even some other sectors between larges and small. So anyway, just your take on the whole regional banking thing and
Um,
how you approach it
so it was
from a trade.
Silicon Valley, and that was that ESG
That was
bullshit.
right. Yeah, yeah, that's right.
ESG crap.
Yeah,
I was talking about that the other day because I was like, where'd that go? That went away fucking fast. Um,
yeah,
DEI hanging out a little bit more, but the ESG was out the window. Um, you can see on my weekly here that last drop, and the key was, yeah. When you mentioned key, I was like, hell yeah, man! I remember buying that under 10, just thinking I was going to get the 30% out of that. I think I ended up, closer to 80 on the high point. I am all out of that one, and first thing I thought was like, I'm not buying that up here. But
yeah, sure.
um, how I look at banks, kind of the bigger thing there, because I don't really invest in them outside of I like the I mean, I like
Yeah,
the new tech. I like the Squares, the SoFis, and the PayPal's. Because I just
right.
think that's where the kids are going, and in 30 years, that's where they're gonna go. And as far as like the current banking mapping conditions, the reason I stay away from them is because the big fish always win. That's the king. Like, I don't know which one is the king currently, but you know J.P. Morgan and all them are the kings, and then you kind of have your credit cards, which is your little bit of lateral movement people, and your regional banks are the pawns. Like, so if anyone's getting damage on that chessboard first, it's gonna be them, and um, so for me, you just buy the oversold. That was kind of like an opportunity trade. Like,
Yeah,
it just didn't make sense. But I like the bigger names currently because they're too big to fail. I think interest rates help them in some regard, right? That has to work.
yeah,
People move money around a little bit more to maximize the rate situation. They are taking hits a little bit, maybe in like the auto and home sector, but um, that's that's kind of that goes down to the smaller ones that are more niche. If you're
yeah.
60% mortgage, it's probably going to hurt a little more than someone like a Citibank or something like that. But overall, like, I wouldn't say a nothing burger. Um, but I don't think if something happens, it's going to be like last time where it's just going to be in their sector. I think it would affect the whole market. So um, yeah, we save them. We'll continue to save them.
Yeah, I so a good example for me was so Goldman Sachs
Yeah.
had they were like the anomaly. They dropped. I mean, most of them went up, in like Wells Fargo, Bank of America, C, all those,
Hmm.
and Morgan Stanley. But Goldman Sachs, it just plummeted and then dropped like 5%. And I had it in my notes, and I was all over this one. Um, for one thing, with options, I don't. You've probably noticed this when there's stocks in the $400 to $800 area. I actually like those a lot for options.
Oh, sure, sure.
It has to do with the option pricing and the way they move and reads and all that. But anyway, I mean that was a really easy. that was a really easy bounce on that day, and I didn't even get all of it. I actually only got it back to like that near 770, that move up, and I just got out. And you kind of see I don't really sit through pullbacks like this from that 769 to 759. There's no chance in hell I'm sitting through that in a short expiration option. Yes, it went way higher. Yes, I got 100% instead of 400% or whatever the hell. But I didn't really care. But point being though that this one did retrace back down, and it's a good example that the secondary part of this trade is to kind of see what happens from here. But overall, I'll go even further out here. I like the 4 hour. We're still look at where we are. Um, it's still like nothing. So it's not. These aren't very investable up here. Like that's not even a pullback on the in the big picture. That was back in April. That was where you could have gotten a hold of this one. So yeah, I mean, I just think in a lot of charts, banking in particular, um, what's going to feel like a disaster for people and is framed that way, if these do pull back further, um, you zoom out and it's kind of like that's not really
Nothing.
much of anything. So I uh, I think it's a hard. I don't think it's a sector you can just pile in, but I do think though there's a lot of trades here because it's one of those things. Just to use the Vegas analogy for a minute, but sometimes there'll be some team where they just can't get the lines right, and it'll go on for a month or more, where this team just constantly covers the spread because the line is just always off, right? And eventually they catch up and things settle. But with the options, the math on it's complicated. I've shared videos about it. You can watch that if you want to. But I can just say that a sector like this um, isn't built for some of the moves that are going to happen, and especially the regional ones, where you can get some really favorable trades just because um, they aren't built to move 2 to 6% a day, which is what they're probably going to do for a while now. So yeah, so I think there are definitely some opportunities there, but yeah, investor mode's hard. If you want investor mode, I do think you're in PayPal and stuff like that. So with you there.
Or you're with me and my kid at SoFi down in the fives and sevens.
You're right. Yeah, yeah. I mean, of things you could add now is what. Yeah, I'll
Oh,
say that. But
um,
yeah, my
and you
SoFi.
and you
Oh, go
still
ahead. Yeah,
pretty fresh. Throw that out there.
yeah. Oh, yeah.
Yeah. What are you gonna say about SoFi?
Oh, so just that
We live in right, but it's
these
just 26 going.
um the lines I had on it. These are some of my oldest lines. You can see, like, I didn't even
13.
know how to make them go all the way
Yeah,
across. I
13.
just drew little line segments, and it
Yeah.
was just like this zone. And all when it was down here, I was like, I just want to break back into this zone because if it gets the bottom line, it's going to get the top
Yeah,
line.
you see why
That was my whole idea.
26 is important staying up there. You got it. You got it. You got it.
Yeah, yeah.
You got.
So
I mean
then
that's almost a
here we are.
math problem to be honest. There, P. That's not real TA.
Yeah.
It's just because it's so new, but you get it. You get it.
Right, right.
13 was like my last call spot. Like I refused to buy over 13, and that was because my child was always, I'm just gonna keep buying no matter what price it is. And I was like,
Yeah,
all right, now that we're on this side of it, no more buying on over 13. So
yeah,
no, I mean, everyone that was my A to the Tesla, or my B to the Tesla mentioned earlier. Like if you want to go long,
yeah,
I'll usually give you some really good reasons to go long. Besides, this sector's hot and has range.
yeah. Right.
That's not a reason to go long in most cases. I think I mean the regionals is just so big, P. That's the problem there for me. That list is long. Like
Yeah,
there's a lot of them. So finding the right ones or finding the ones that are going to have the reason to move after a pullback, most important for me.
yeah. Well, and I would add to that too that normally, in a sector like that, you say, well, I'll just go with the ETF. Well, the problem with the ETF is it can get a little bit like the big losers in it can really drag it down, and so that's why I kind of I go the opposite approach that um, I'd rather have a more modest move in a stable bank that doesn't have the issues that we're talking about. Funding venture capitalists in San Francisco for the Bank of the Ozarks was not really an issue last time, so
Yeah.
they recovered well. So like I mean, so part of it is there are some
Is that
obvious elements
is
to it.
that
And
OZK?
yeah, yeah,
Yeah. That's I mean that's what you're looking for. I'm
right.
just kind of looking at the bottom of what happened so far, but even share structure and everything. I mean that's kind of what you're looking for, and then if you have some any kind of option flow, it's just a lot to go through. So yeah, if we
Yeah,
have
and
some.
my I used to trade banks a lot more in that I just sort of when I got back into this, it was like um, I want an oil stock, a bank stock, an airline stock, and and
Oh
I just sort in
Jesus.
a restaurant and there wasn't much method to my process other than like I'm going to look at and study these sectors separately, and then and then through our work, um, uh, there was like a little more to it. It's like no, like you don't just say I'm going to trade a bank every day. That's not how you do it. And then banks themselves weren't really that great for day trading as compared to some other things. And then through our work, um, I mean, the first big hits on it that I remember were oil, just because of the what was going on at the time, and then play, like and
Sure.
Macy's. That was
Sure.
the other thing too. I want a store and like I like Macy's and but
Build a Bear Crocs around that time for me too. That was
yeah,
always
yeah, right,
just
right,
just
yeah.
because that's
Oh,
where the 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 kind of the mall thesis was all that restaurants and malls was all kind of together there.
yeah, and the mall thing. I mean, that was, and I'll get on to the boring stuff after this, but that was one of the early examples of boy, everyone really hates this sector, and it's all dead and going under. However, whales don't seem to think so, and then just had some great setups in there on just the the hated stock, the hated sector, whatever, whether it was Gap or I was even early on Abercrombie on that crazy
Hmm.
move that it did.
The
It just things that you wouldn't think would do what they did. Um, and now people talk about Build a Bear because
oh yeah, it wouldn't stop.
it's done better than Nvidia or whatever.
Yeah.
And yeah,
Yeah, no, and I don't look back and I'm mad that I missed out on whatever happened. You just thankful and move on to the next one.
yeah,
To before we go, just to kind of wrap that up so people can take advantage of things. For me, when we first got together, like the contrast of just how you like, I'm gonna look at this sector and whatever lines up, and I still to this day kind of don't do that. I look for certain chart structures or certain things depending on market condition, right? But early
yeah,
on, I would go in the sector and be like, let me find a chart that works in that sector if this is going to be the case, and maybe not as diligent as I did after oil, because then it was like full bore. That's all I really did was like, all right, what are you talking about? And not to prove you wrong, but it almost became like a competition. Like, you think you can find a good this chart, whatever it is, I'll go find a better one. um,
yeah,
and and that was always the case, and it pretty much like in the worst conditions that's still gives me decent results, and um, in any sector is just fine because that's what it's about to me. And that contrast, I think, is really our bread and butter, and people don't understand. Like, that's really what makes us different is we just look at it two different ways and arrive at the same point, so to speak. And my last small stock, pull up I got your chart up, but pull up Victoria's
yeah,
Secret. I was buying that at 18 early in the year, and it's the same thesis. I just never let it go, and you just find stuff in certain positions,
yeah.
and then you end up okay, and it's just that the mall's still going. And we tried, what I tried to hit Bed Bath and Beyond a few weeks ago. We were searching for that
Right.
because it's the same
Mhm.
thing. It's just looking for those chart shapes in a sector you're familiar with. So I mean, that's again, I'm pounding that table because that's literally our bread and butter. I mean, if you drop a
Yeah,
sector, and I come in with a chart from that sector, I would, well, I would go try to find your own chart in the sector so you create some skill. But I would definitely put, one or two of yours on there and the one that I put up there. We just did it with Bitcoin a few weeks ago.
yeah, yeah, absolutely. And yeah, Gap was one of the rare ticker changes that was actually good.
Good, yeah.
'Cause it used to be GPS. Some of them I don't understand. The gold still makes me mad, even though I still have some. But
The B's
um,
okay. Barrett's okay.
yeah, I guess. I don't
What's
know,
up
but
with
it was just
XYZ though?
yeah. That one, I don't like that one at all.
I hate that
No,
one.
yeah.
All right, let's go boring.
Um,
We gotta go boring.
yep. All right. So I mean, just my obligatory mention of
Where are we on?
uh,
Gold.
gold and
God, talking
the
5K.
gold unwind. Here's the gold unwind because it's down 2%, right? But
They're calling 5K. China's buying. That's what I heard.
yeah,
But
yeah. It's
that's what I heard.
and then silver finally. That's the kind of day in silver that you look for. We'll kind of see. Uh, I don't know, 48 maybe or something. Um, but I miners again, it's just going to have to. The setups will have to emerge, adjusted to this new price, and a lot of miners will still be tradable. It's just a much different kind of thing than when we first got into them. So
I'm just trying to make
expect,
taxes.
yeah, yeah.
I mean, with what I have left, I'm just trying to make the long term taxes so I can get rid of it. I mean,
Yeah,
I don't know what
gotcha.
else you do.
Yep. Uh, copper. I like the setup here. If you get in this like 480 to 520 kind of thing, copper's gonna break out. Copper's gonna be $7. I mean, that's just what I think. I just it's you start building things, and I talked this week about data centers and energy and all of that. So a lot is going to have to be done to uh, upgrade and enhance our electrical grid in this country. And so the energy trade, that was my big theme for the year. It didn't 100% play out how I thought with the nuclear thing, but we were on that, and that the kind of the idea trade part of it, the projections of these modular reactors and the AI and all of that. I mean, you're going to have to start putting shovels in the ground, and um, that side of the trade is going to benefit copper. So I still think there's going to be a lot of room in some copper setups, but it's one of those sectors where you want it to have a bad day or two before you hop back in. And the good example. And this one, I mean, this is why I talk about like this one will kick your ass if you're not careful. Like you have to be much more careful with FCX than the other one. But you can see that flush below my line, and people were asking me complicated questions about it. I just buy it under 37, and that's the end. And then I just wait. I wait for it to pop in the middle of the zone, and then here we are. So yeah, regrouping here, retesting that line, all that's on the table, but um, still overall like the sector a lot.
Throw your weekly up on that real quick. Um, yeah, no, they're yeah, that was a month of bad. Um, you're gonna need like I'm with you on you're gonna need the copper. Um, the where I got lost at is you were talking about you missed the energy trade, and I was like, well, not really, because I'm flat brain
No, no, no.
person, so uranium and all that counts. But like what I just said with the sector thing, like I was looking for tickers with just energy in them for a while, and we found BE during that time, and it was
Yeah.
$24 and change. Don't look at that chart. So, and there was a couple other ones that weren't as good I can't think of, but um, it's kind of like my Nvidia thing, right? Like you don't have to be right on the exact thesis. You just have to be right on the timing in the sector.
Well, not that I missed it. It played out differently than I thought.
Sure.
Oil has not done what I expected.
Oh, okay. Well,
Although the price of the oil stocks has held up pretty well given
do you know, and
I
BP
might as
did
well do that now.
amazing for me, and I did okay on XOM on 2 trades.
Yeah, and I've had EXE was good for me. Dino was good for me.
You didn't get BP?
Uh, no, I didn't get BP
Ooh,
this round.
what was that buyout? I think someone was trying to buy him or something, or they were trying to buy somebody. I
Yeah,
was like, I got to
yeah,
get some of that. But yeah, I
yeah. That
digress.
was
I digress.
Devin was good for me. I mean, because
Oh,
that was just in the dirt.
yeah, I'm
Um,
still there.
yeah, but anyway, on oil, I mean, you are approaching the spot like you don't want to break down much further than this to me. Um, but
But that
yeah,
goes
I mean,
hand in
low.
hand with your building stuff. Like I said, you gotta ship that fucking copper across the country. You gotta get the trucking going. That's where that's gonna, fuel go up. Yada yada yada. So I think that's all linked. Like as stuff goes up, gas kind of goes up a little bit.
Yeah, and I think that the way that people trade oil incorrectly is that you get the geopolitical news in the Middle East, the price shock, and then oil will you know go up overnight, and then they pile in. Those moves don't really hold. I think that you want genuine demand and the recognition of the sector being a big part of building things, and then it starts to level out a bit, and I think you get to the 70 to 90, and what you would want is for it to park in that range for I don't know a year or two, and then there'll be a lot of really good trades within the sector once it does
Yeah,
that.
well, I'm inside your 70 to 90, but I don't like the over 82, 85 oil.
Mhm.
Mid 70s good. It's still $5 out here.
Yeah,
Fucking ridiculous. So it's almost like one of those
uh,
things that
yeah,
can't. One of those things that can't go away because they make too much tax money on it. Like
yeah,
even if we
right.
had, even if like your car or my car worked right, it was a better option. We could implement it tomorrow. I mean, there's just too much tax going to the other side. Sorry.
Yeah, no, well, yeah, I mean, I've been real happy with
Oh, me
like
too.
in this part of the country. If you're just gonna have a little Honda, like I do, I don't know why you wouldn't get the natural gas one. And it's because it has all the same parts. And this one thing, those Hondas have been the same for
Yeah.
decades,
Yeah.
and
Yeah.
it's
Yeah.
so cheap to fix them. But then it's cheaper to fill it up, and the gas mileage is better, and like everything's just better than the natural gas side. So, but it still was just sort of a gimmick, and even here isn't like widely adopted. But anyway, yeah. So as far as natural gas goes, not much to say here. Uh, the hanging around $3 is fine. Still looking for the 5 to 7 area.
It's getting
Once,
it's getting cold outside.
yeah, there you go. Yep.
I think I
Let me
got one
see
this
here.
week. Yeah, I got one this week.
Yep, yep. All right. So
Apple.
anything before I go to Bitcoin?
10 year.
Uh, oh yeah, 10 year. Yeah, let's do that.
Because it's breaking 4.
Yeah,
I mean it's not just testing underneath it. It's in the process of trying to break 4 down last week. So a lot going. I mean I'm not trying to. Sometimes you just got to say I don't know what's going on. I'm not going to try to figure it out because I don't want to be wrong. And there's just so much going on right now. It's tough to figure out what's kind of pausing the market volume wise, which we didn't really talk about that much. Maybe when we spy, and what's causing like the rates, what's causing the Bitcoin stuff like that to move. Um, Overall slow. I mean, if you want something consistent, the market's just slow right now. Last 2 weeks.
yes, yeah. The as far as the breakdown in the 10 year, I mean, I would think that 370s somewhere would be where it would reverse. Um,
I think it's more like we've talked about. It's just those drastic moves you don't want to have happen.
yeah,
That's more important. That shock to the system, like you said, I forget your exact words, but like certain mechanics have to happen when you get that shock, and I think that's what.
yeah, and it's just you'll get too many people trying to pile through the exit at the same time on when they're unwinding trades, and it can cause some cascading issues. And next thing you look, and Nvidia's down 5% pre-market or something. And but then those are always the don't chase puts moments. It's those kind of moves only hurt you if you're in overnight, and it's options in particular that your $300 option is $40 the next morning.
Yeah,
Like that happens to traders all the time.
yeah,
So
trade some shares.
avoid that. Yeah,
Might
yeah,
as well
yeah.
just trade bios. Fuck, you're basically trading bios. Sorry.
Right. Yeah.
Sorry.
Yep. All right. So then, crypto. So I didn't quite get to your number, although you're a lot closer to yours than mine of late. But and I'm referring to that. I think what you said, like 102. And
Oh, from a trend change, yeah. I like the
yeah,
108
yeah,
though. I'm with you on the 108.
yeah.
I'm just more about 123 top 50 candles. That was more where I was at, and I think we're still getting that. Um,
Yeah, and
I mean, I think
the
we're
way that
upper 20s now, upper 20s on candles left on there. I think so. Um, yeah, no, it is what it is. I thought it was the government shutdown. Just that 1 week gave us a little bit of momentum up, but it pulled right back into the zone where it needs to stay. Larger time frames kind of show it well. So
yeah, so this week, I mean, it kind of looks to me like it's going to revisit the one teens, 115, something like that. The whale positioning on it is for through the weekend for the initial pop, and then we'll see if we get the follow through. But
yeah, I think
it's
the 113 108 kind of a really good local channel there. I mean, the
yeah,
consolidation you want to see because it's a little tighter in price range, which makes you not get stopped out. Sorry.
right, right. Yeah, and a lot of, like, as always with Bitcoin, a lot of it is liquidity grabs and
Oh,
you're not
100%.
leveraged. The the move. I mean, for it to drop to under 105 before the markets even open, it's not a coincidence that was when that happened. That, I mean, for one thing, it's you always have to watch the Asian market and what it does to it, but also you can clear out some people while nobody's really around, and it's harder to do in the middle of the day with all that volume. So
And
um,
chilling. Obviously, and I mean, it's a good time to say that. Obviously, an active sector, kind of a shitty sector. Don't really have a great thesis besides it's volatile. Um,
yeah,
so we'll find a chart, but keep your expectations around that. Like, I know the one that you brought back up, I've already said thank you on. Um, and the ones that I brought up, I've already said thank you on. So, just
yeah, yeah,
reassess and find some more you can say thank you on, and treat it like that. Like, again, the valleys and the tops of the mountains, not necessarily the moon or even a plane ride.
yep. All right, so I'm gonna go to spy.
Yeah, why not? I didn't inject it in earlier, but I injected here. Big algo. Felt like this algo was trading last week, and a lot of things that I was trading, you could just like see it. It was just meticulous, and if there was two lines drawn in the sand or in level two, they weren't fighting; they were just posturing, which keeps the volume down, so to speak. Wanted to mention what I said about a price point. I was not 660 a few weeks ago, or excuse me, a few months ago. But like, you know, there was a time where if we said 660 up, 3%, people would be like, "This is the bullish fucking market ever." And we just pulled
Yeah,
back to 660, down 4 or 5%, whatever the case may be, maybe a 2% day, and people are panicking. It's the same damn price. Zoom out. Quit staring at the wall from 2 inches away. You should have expected the pullback. And last week I asked P2 simple questions. Finish above 660. We were both. He said no. I said I could see that. I'll roll with you. And will we even touch 660? He was a no, and I said, all right, I'll disagree with you on that one. We didn't let go of 660 all week. So just kind of be
Yeah.
mindful of that. Again, just step back, keep it simple, and watch what happens. So strength overall in the pullback for me, even in a low volume environment, just was not much downside.
Yeah, I mean the stringing together significant red days is still difficult for them to pull off, and as is like a trend day down is not really in the cards right now. You have um, the that pre market low, and then grind up and recover half of it, maybe drop again. That's kind of where we're at, but it just there isn't a lot of breaking new ground to the downside during the day. So for whatever reason that's happening, and the I mean the algos are probably the explanation, I would say, mechanically, of why that is. And you kind of learn to when you're looking at a chart, like, okay, this isn't, human beings are not trading this way. Like you can just sort of see,
You think?
you got to see the matrix a bit on those. But yeah, you're just the retail's just kind of along for the ride, scalping zero DTE or whatever. But yeah, and I think that on that note, I mean, ever since they went to everyday options on SPY, things have been different, and the um, you would think that that would give retail more influence, but it's sort of the opposite. It's just it's easier for the algorithms to control things when you have that amount of worthless worthless contracts constantly churning on this stupid thing. So yeah, that's you just have to be careful. Don't chase puts. Still is the main of all the things that I say over and over. I think that's the has been the most important one. And I hope I don't think anyone here does it, but it is a message to just reiterate that you don't chase downside, and you just don't automatically assume that you get some big follow through just because the market had a bad day. It's just too much going on.
Yeah, no, and if you kind of look at it, the last it was Friday the previous week, and then this last week it was pre-market Thursday. Not as much all came back, so kind of understanding how pullback is working inside the larger time frame is important too. We didn't make a lower low last week. If you're trying to read between what I'm saying, we didn't make a lower low. Um,
Yeah.
we definitely got over mid candle the pullback previous week, so overall, it just shows a little strength, and you got to be mindful of that. And with the some big names on deck this week for earnings too over there, so
Yes.
I think we'll choose a direction this week. I believe that. I believe that. And Monday tomorrow is my cutoff line for the shutdown, which they're not going to get it resolved tomorrow. So hopefully it is in this week, or that might open up another can of worms there too. So
Yeah, absolutely. And a lot of on the option side, a lot of junk coming off the books from the 1017 expiration, and I mean the only contract that's relevant on this list of the highest volume ones is that March 610, and it doesn't have it's not paired with anything right now, and they've been selling it off mostly lately. So so yeah, that so 610 needs a 640 or something like that to be any kind of legitimate downside boxing glove.
that's all
So
old
until you
shit
get
though, huh? That's all old.
yeah. Yeah, oh yeah. Yeah, it's all old. So but that's the one that they'll wake it up by having, a rung on the ladder to get to it. And they haven't done that yet. So
Still
more of the same.
it's still interesting to me. We have a lot, yeah, more the same. A lot of red still on the screen, and the calls that are popping up anytime are really close to the money.
Yeah, and they're all short expirations. So,
Yeah,
and then you can see on this list.
love this one.
I mean, February does stand out. So if they're gonna do something, then they're gonna work around that expiration, I think. So, so we'll see. and that's of next year.
Could you imagine having so much money that you have to sell after the first of the year for tax reasons, but you can buy a couple million in puts. So when you sell, your puts make you money. So you make money on your
Yeah,
shares, and then you make money on your
right.
puts. Could you just
Yeah,
imagine
yeah,
that you have to like manage that kind of trading? And I can't get people to scale in. Damn.
yeah. Right, right. Yeah, the yeah, the trade like a whale
I mean, that's
doesn't
it.
look as easy when you're talking about 2026 puts, um, and for 6 grand a piece or whatever they
Yeah.
are. So yeah,
Well, it just looks like a blip on a green map, and then why is it there? Real quick in my head, well, okay, shit, people are gonna sell in January. You don't obviously buy in the middle of the sell, right? You got to be a month or two out of it on your
yeah, yeah.
contract. And interesting. Um, yeah. So what this week? More of the same.
Uh, yes, I do think there'll be a couple bad mornings here and there. Hard to time them, and I've mentioned that before too. That you can catch a 1% down on QQQ. If you catch that the night before, you make a lot of money the next morning. But what day this week is that going to happen, or what 2 days this week?
Yeah, I
And
get
then
you.
I got to hedge the other side, and then half the days you'll lose money on both of them. So you can't time it. You just can't do it. But yeah, real quick on I mean, this is earnings. Kind of had my fun with the quiet earnings. Now, like the real stuff starts.
Oh
So
yeah.
uh, this is going to be, a big deal. Netflix has been a barometer before, but
Tesla too. Tesla's gonna be
yeah,
fun.
Tesla. So yeah, and then a lot of good
And
secondary names on
Intel,
that list.
Intel, and the government.
Yeah, it this is the free session, so I won't tell you which ones I like on this list, but I think anyone who's been around long enough can probably spot a few that I'll be talking about. So um, yeah, should be a fun week.
Yeah, good time for you people that are around to pick out like the ones that you have success with before and that Professor does, and then make that list. And then when he drops them, attack, because those
Yeah,
are usually pretty good. Um, Last thing for me, 50 SMA on the daily for SPY. Don't panic till it breaks.
very
Perfect.
good.
You ready to get to work?
Yeah, I'll need a quick break and then we'll hit it.
Perfect. Like and subscribe. Link somewhere, people.